Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, April the 21st. I'm Eric Wilkinson, and you guys may well recognize me as the Wolfman from mainstream media, where I've talked about the overall economic and geopolitical environments and how that impacts the overall markets. And on top of that, in these daily market commentaries, I layer on some option strategies that I find for those assumptions I come up with throughout all of that data mining, if you will. So it's a little bit better for you guys because I'm going to explain the rules that I've come up with over the course of my trading career. So those guidelines that will help you decide what option strategy fits best for that market assumption that you come up with, whether it's a bullish, bearish, or market neutral assumption for those types of situations you find yourself coming up with for these different types of markets. All right. Without further ado, let's talk about the economic data. Across the pond, not really a whole lot to see there. One thing we did get here in the United States was existing home sales, and surprisingly, it came in line with expectations at 5.27 million units. So that I was expecting to be much lower, to be quite honest, especially with as many people that are becoming unemployed in this whole pandemic. Well, I would think that some of those people that were even considering buying a house would be maybe a little bit more worried about their income going forward and may have held off on that, but it doesn't seem to be the case necessarily. So, it is lower than what we were seeing, a few months ago, but it is still relatively a decent number. It's not like we're seeing that in the recessionary times, okay? So pretty surprising there. So without further ado, without all that, there's really not a whole lot else to talk about there. So let's talk about this crude oil. All right, crude oil yesterday, historic, never happened before, went into negative territory. And this is the WTI. I talked about this yesterday. This is the West Texas intermediaries, and that is the United States oil. Well, something that was very interesting yesterday is that we saw it. I talked about it was trading super low yesterday. I think the low I talked about there was $5 or something like that. Well, let's take a look at it here. It went into negative territory, okay, you guys? So for every one contract in this particular underlying, it's worth 1,000 barrels of oil. All right, so each barrel of oil is around 42 gallons, I believe, somewhere give or take. Well, so that means that one contractor taking in 42,000 gallons of oil. Well, we've talked about the supply being ramped up with Saudi Arabia and Russia and the United States saying they weren't necessarily going to get a cutback. Well, then we also talked further where Saudi Arabia came out and said that they were going to cut by 9.7 million barrels a day. United States, Canada, and Brazil, I believe, was cut back by 3.7 million barrels. Okay, so that was only about half of what we saw in the demand coming out, which was closer to almost 30 million barrels a day in lack of demand. We're talking about we're all staying at home. Nobody's driving. Factories are shut down. They are one of the biggest demand drivers of the crude oil, right? So if all of those things are shut down, there's just no demand. Now we're seeing all of the capacity where we are supposed to store this stuff going to full, basically seeping out of the edges, right? Some of the refiners are only at 80% capacity, so they're not really refining this, and they don't really have any incentive to because they don't know where the demand's going to come from. Whether they put it into airplane fuel, well, that's not happening. Consumers for gasoline, well, that doesn't seem to be really a demand driver right now. So they are basically not taking delivery on these oil products. As a matter of fact, we were seeing them, some of the refiners reject barrels at historic rates. So the U.S. Storage levels are just completely bursting at the seams. They can't take on any more oil, so they're rejecting what is coming because they're not being able to offload the byproducts of what they're creating here. So negative, let's talk about this. Right now it's at $5 for a barrel of oil, basically, which is cheaper than, you know, going out and buying a cup of coffee at Starbucks. All right. So, but when it goes into negative territory, which we've never seen before, that means the people that are producing it are paying you to take that barrel of oil. $40. I'll give you $40 if you take this barrel of oil from me. That is absolutely mind-boggling, right? Well, today we've gotten that rebound. What made that go into negative territory? Part of it is the rejection from all these refiners. But I think that more so this was probably a capitulation moment where somebody that had a lot of longs needed to puke because they didn't want to take delivery of that oil, right? So as a futures contract, if you get in and out, you know, as a trader, then you can get in and out of those contracts. But if I were to hold this and it expires today, through the end of the day, I would, if I bought it, would have to take delivery of that. Well, at negative $40 a barrel, I sure would be considering it, even though I don't have any place to store it. I'd probably try and find some place to store it because they would be paying me $40,000 to take 1,000 barrels of oil. That's a pretty darn good return on your investment if you just sit on it, to be quite honest. So that happened yesterday. We got the nice bit of a rebound today. It's trading $5 a barrel though, which is just absolutely insane. That is the front month contract. What I usually talk about is the spot month, and that's where the most time and volume has been spent. That's right now in the June contract. So May just being the front month, delivery happening if you hold any contracts today. If you're short those, then you have to deliver those that oil. So a lot of people may be trying to get out before they had to take delivery, and that caused a massive puke. So that could have been like a hedge fund or something. It's not really clear at this point what was happening there. All right, gold futures off by about $17, $18 right now, breaking below that $17 or 1,700 troy ounce mark today, back into that value area. I've talked about this. I think we're going to see some more support here in gold because of the amount of money the government is continuing to push out. We're starting to see a lot of that stimulus money has already been used up, and maybe there is another round of stimulus coming down the pike. So we're going to have to keep an eye on gold futures, see if we see any movement higher. Back here in the bonds, up almost 2 points. 32 is another full point, so we're just about 6-7 ticks off of that right now. But back into the 180 handle yesterday and was able to sustain that as well. All right, the VIX. We got a big spike here in the VIX. Is one of the biggest moves up we've seen in the VIX since like I think it was like March 20. It's probably this day right here. Yeah, March 17th. So biggest upward one-day move in the VIX, and that's because we're seeing a lot of things going on in the equities. Equities are seeing some weakness across the board. Yesterday we saw it late day sell-off. Today another 600 points down in the Dow futures. Utilities and real estate holding up today. Yesterday they were really getting decimated. That was probably ahead of the data point today. Now we're seeing that these new home sales are in line with expectations. Maybe a little bit of those fears that people are continuing to pay their mortgages, even though there has been a lot of people deferring those mortgages. But utilities and real estate weakness would be a signal that the overall market is very nervous about another downturn in the economy, you know, worse than what we've already expected in a sense. So today those are holding up, which is quite nice to see. We've been expecting those to start to fall off. We did get a couple of earnings coming out. You remember I have Coca Cola on my books. I'll talk about that here in a little bit. But, you know, they're all trying to give decent forward guidances, and they're all trying to get on TV and talk. So we got the NASDAQ off by about 300 points. You can tell near the lows of the day, but finding support around that 50-day moving average. Something I've talked about for the last few days. You know, I think we got a little overextended. We got a little ahead of ourselves about a couple of days ago, where we were in positive territory for the year, and that, you know, forward-looking future or you know, expectations of what these companies are going to be able to do at the beginning of the year till now is two completely different scenarios, right? So I think that the markets were a little bit overextended. We're seeing a bit of a pullback now, and I think that that is something that is healthy for this type of market, to be quite honest. If we continue to get those moves higher after that point, it seems like it just gets a little ridiculous and the fall would be much worse. So I think that a pullback here back into the value area is a welcome sign, to be quite honest, at least for the health of a future rebound. All right, so I know that is not what everybody wants to hear, you guys, but the truth be told, that's really what creates a healthy market, is these pullbacks when people can then you know, find value when it's not overvalued, which is what I think that the markets were starting to price in just way too over their tips, their ski tips in a sense. E-mini S&P, as we can see, off by about 78 points. This is that late day rally. Almost as soon as I got done with the daily market commentary yesterday, we saw that big sell-off. This is where the housing or the real estate and the utilities were really getting crushed. Today we're seeing another downturn. Some of this has to do with, oh, and one thing I want to talk about, well, North Korean Kim Jong-un had surgery and does not look like it is going to work out very well for him. That's crushed their currency overnight. But another thing I wanted to talk about is we are seeing with that oil problem, right? Today, now yesterday we had the big sell-off in that front month contract. That was before we got information out today that there was supposed to be a big conference call, if you will, with Saudi Arabia, the Middle East. But basically today, Saudi Arabia, Kuwait, and another country said that they weren't going to be on that call. So to me, that says nothing is going to change there. They're going to continue to produce that oil. They're not going to see any cutbacks to try and support these levels. They're going to continue to see this move on. Now, what does that say for the oil companies here in the United States? They can't shut off these wells, you guys, because once they cap those wells, it's very difficult to drive that oil out, and sometimes that well just becomes a dry well. And I don't know all of the engineering that goes behind it, but it has to do with like the pressure in the ground that they're creating to be able to pump this oil out of the ground. So at these levels, these guys not only are getting crushed because you know, their break even, we've talked about this, is somewhere between $35 and $40 a barrel. Well, at $5 a barrel, they're losing money on that margin because it costs them more to pull it out of the ground than what they're able to sell it for. And then even worse when it goes into negative territory, where I'm telling you, you got to pay me to take that. You know, that's $80 a barrel difference between that, you know, 40 your break even and you're giving me $40 to take it. That is a lot of money coming out of their pockets. All right, so something to keep in mind for those oil producers as well going forward. There's a lot of them that can really slow it down and you know, weather this storm, but this is like sitting through a tsunami or a hurricane, the type of environments we're seeing going on, just the craziest things that I've ever seen. And you know, so if you're trading through this, it's going to be the craziest thing you've probably ever seen for at least several decades. All right, so E-mini S&P is coming off a little bit here. Let's get on to Facebook having a pretty bad day, but bouncing back. They were down about $10. I still am I'm still in Facebook's camp because I think that they're getting, with this quarantine, a lot of people on there. Well, are people starting to cut back on, are companies cutting back on their marketing push and Facebook and their advertising and stuff like that? Absolutely they are. But some of the bigger names are probably going to be able to push through this. The mom and pops are probably pulling back on some of their campaigns. But at the end of the day, they've got more faces on there than, or more eyeballs on their site than normal, and that is going to help, I think, on their bottom line, to be quite honest. One thing I was wanting to look at was, I can't remember what I was going to call, oh, Coca Cola. Coca Cola is something that I have in mind, but you know, obviously they missed on earnings. They started really falling out of bed. The CEO went online or on CNBC, I think, and was talking very bullish about the prospects and how they are going to weather through this storm. Yes, they are seeing a bit of a pullback in their sales. Most of that has to do with the restaurants and stuff like that aren't buying, and it's more coming from they're seeing an increase from the retail or UNI, but the retails or the stadiums, the bars and stuff like that, really seeing that go to zero. But that guy was very bullish and caused this market to come back. But I think that's more of what we are going to see. Yes, they have taken a hit. We've all known that was coming down the pike, but going forward, how are they going to weather through this? How are they going to manage this situation? And he did a very good job of doing that, obviously causing this market to come back quite a bit. It was actually even positive on the day at one point. All right, so that's all I got for you guys. I haven't added or taken anything off of my portfolio at this point today. Just kind of keeping an eye on it with this bit of a sell-off, but I'll keep you guys posted on Twitter if I do anything. So that's all I got for you today. If you can't take that, take it easy.